Good day, viewers. Welcome to another episode of Financial Accounting Made Simple. Today, we'll be concluding on trial balance. We'll be looking at the other part of the question, which I mentioned in the first video. I said there are two ways at which examination question can come when it comes to trial balance. The first way is when you are given the ledger balances and you are asked to extract the trial balance. In doing that, you have to be conversant with items of assets, liability, income or gain, and expenses. On the second method, you'll be given questions where you are expected to prepare different subsidiary books, or you can prepare only the measures and extract the trial balance. In which way of the two methods that you are using, the point is you must arrive at the trial balance. So here today, we are going to be looking at this question where we are going to prepare different subsidiary books and post to the ledger from the subsidiary books, and there we extract our trial balance. Looking at the question we have here, we have a business that started January 2nd with capital in cash of 5,000 naira. January 4, paid insurance by check 170. January 7, bought goods on credit from the following people: Ngoka 250, Okulu 150. 8, cash sales 3,000 naira. 10, paid carriage by cash 50 naira. 13, check received from Abiola 1,050 naira. 15, cash purchases 500 naira. 17, bought fixtures by check 105 naira. 25, cash taken for own use 80 naira. 27, sold goods on credit to Lasisi 70 naira. Demola 162 naira. 30, we return goods to Ngoka 15 naira, Okulu 15 naira. You are required to record the transaction in the ledgers and extract a trial balance. So from this question, we can see that we have different subsidiary books we can prepare, such like the cash book and the day books. So for the day books, we are going to prepare the sales day book and the purchase day book and the return outward day book. Let's quickly swing into the question. Looking at what we have on the board, we have prepared down all our ledgers for the subsidiary books. And looking at the first subsidiary book we have here is the cash book, which is a 2-column cash book. The cash book is the summary of the receipt and payment. So on the debit side of the cash book, we have the date of the transaction, the particulars in the transaction, the folio, the bank, and the cash. Because the question we are giving involves both cash and check. So we have the same thing on the credit side: date, particulars, folio, bank, and cash. Mind you, the debit side of the column of the cash book record the receipts and whatever comes into the business, while the credit side records all the payments or whatever goes out of the business. Also, we have our sales journal and purchase journal that we are going to use to record transactions that are made on credit basis. Cash transactions will not go into a sales table or the purchase table. Likewise, the return or top table. After which, we transfer all the items we have in our subsidiary books to the prepared ledger. Looking at the first question, we have January 2nd, started business with capital in cash, 5,000 naira. When we are starting a business in cash, it will be on the debit side. So we have January 2nd, capital. That is what is used to start the business. And it is mainly in cash. So it will be recorded under cash. That is 5,000. January 4th, insurance was paid by check. The paid insurance by check. Checking transactions will go under bank, while cash transaction will go under cash. So since we are making payments, we are going to come to the payment side of our cash book, which is the credit side. So we have under date, January 4. And we have what? Insurance. Insurance. Insurance is being paid by check, and that is 170 naira. The next one is bought goods of credit from the following people: Ngoka 250, Okulu 150. When goods are bought from these people, it means the people that they bought goods from are the supplier. At the end of the day, they are going to be the creditor. So we have to prepare our purchase journal. Our purchase journal is the journal that will handle this transaction. So we had January 7. January 7, Ngoka, $250. Under details, under the folio, you can put PL or PJ or PL, purchase ledger. So Ngoka is 250, and Okulu on the same days, Okulu is 150. So when we add up this together, we have 400, and the 400 will go to the totals. So the next question says cash sales. Cash sales. When we say cash sales, it simply means sold goods for cash. And when you sell goods for cash, money is coming into the business. So we add cash sales, 3,000 for January 8th. So we are going to record it on the debit side. January 8th. Sales. Sales under cash. And that is how much? 3,000 naira. The next question says paid carriage by cash. Paid carriage by cash. We are paying out of the business. So it comes to the payment side, which is January 10. January 10. Make sure you put all the dates the event took place. So we have carriage. January 10. We have carriage, 15 naira by cash. So we put it on the cash. The next one says check received from Abiola. Check received from Abiola, January 13. January 13. Abiola, we received check from Abiola. So money is coming into the business. So check received from Abiola is 1,050 naira. 1,050 naira. Cash purchases. Cash purchases is the same thing as purchase goods for cash or bought goods for cash. So if you are making cash purchases, you are making payment. So for January 15, we have purchases. January 15, we had purchases under cash, and that is how much? 500 naira. 500 naira. January 17, bought fixture by check, 105. So this is another payment. January 17, fixture, that is one they bought by check, and that's how much? That's the 105. January 25. Cash taken for own use. Cash taken for personal use, for own use. That is drawings. It means we are taking part of the money in the business. So we are drawn from the business. So cash taken for own use is 8 naira. Is 80 naira. That is January 25. Drawings. Cash taken for own use, 18 naira. We post it under cash because the transaction involved cash. So the next one is sold goods on credit to Lasisi and Demola. So goods that are sold on credit will be posted in the sales journal. Like I said earlier, transactions that are carried out on cash basis only will go into the cash view, while transaction that has to do with credit basis will go into the journal. So, sold goods on credit to Lasisi, 17 naira. That is January 27. January 27. So we have Lasisi, and that is 17 naira. And Demola, 162 naira. 162 naira. So if we add all this together, we have 2, 13, 2. So the last question we have is January 30. We return goods to Ngoka, 15 naira, Okulu, 15 naira. Part of the goods that were bought from Ngoka and Okulu were returned back to them. So it will go to return outward. Return outward. So we have January 30. Ngoka. How much? 50. Okulu. 18. So addition of these two give us 65 naira. So having done this, we have posted all the transactions in their subsidiary books. So we can balance off all the subsidiary book and post to the ledger. So on this side, on the debit side, we had 1,015 naira, which is greater than what we had in the bank column on our credit side. So we are going to post the account with 1,015 naira. Likewise, on the debit side of our cash, we had 8,000 naira, which is far higher than what we had on the credit side of our cash book. So even though that this side is greater than this side, all we need to do now is to look for the difference between the two totals and insert the difference on the credit side. So on the credit side, we have balance carrying down. So the balance carried down is going to be 1,050 naira minus 170 minus 105. So we are going to have 775 as our balance carried down. While on the other end, you have 8,000 minus 50 minus 500 minus 80. We have 7,370. 7,370. So the 7,370, we are going to bring down our balance on the debit side we have balance brought down. That is balance BD, which is 775, the same balance we had here, and 7,370. So we are balance of our cash book. So we are going to do sale for the ledgers. So in doing that of the ledgers, we have added all the value in the ledgers already. We have 232. So we are going to transfer this value to the sales ledger or sales account. So we are going to say transfer to sales account. Transfer to sales account. So we are transferring this 232 naira total to sales account. The same thing we had there, we are going to transfer say, which is 400 naira transfer to purchase account. So the same thing is applicable here. We have 65 naira that will be transferred to the return outward account. So transfer to return outward accounts. Return outward accounts. Having done this, the next phase is to start posting from each of the subsidiary books to the ledger. So we are going to start picking them one after the other. The only balance that will remain here that we are going to prepare ledger for is cash and bank, because the cash book itself is a principal journal or principal ledger. So we are not going to prepare ledger differently from for the cash and the bank transaction. But for other transactions we have here, we are going to cost them to their different ledgers. So starting from the first row we have there, we have capital. And as you can see, when you are posting from the cash book to the ledger, we are going to put items that you have on the debit side in the cash book, you post them on the credit side in the ledger to complete the double entry system. So items you have on the debit side, you post them to the credit side of the subsidiary and of the ledger. Likewise, items you have for the credit side, you post them to the debit side of their respective ledger to complete the double entry system. So the first one we have here is capital. So we come here and we have capital account. Don't forget to put your debit and credit and your naira sign, your currency sign. So we have capital or the debit side. So when it is coming to capital account here, it's going to be on the credit side under cash. So I have January 2nd, January to cash, because it's coming from cash. So we're going to have 5,000 naira. So the next one is sales. But I'm not going to use this second ledger for sales because I have other page to put inside sales. So let me use this for sales. So I have sales account, debits, credits. So sales on the debit side under cash, I had 3,000. So I will bring it on the credit side, January 8th, cash, 3,000. The next one is Abiola debit, credit, naira, Abiola accounts. Abiola account. So Abiola account is on the debit side under bank. So I will post it to the credit side in Abiola's account. January 13, bank. 1,015 naira. So for all this one that we have posted, we have completed the double entry system. So we move to the next one. The next one is insurance. Insurance is on the credit side. So when we are posting to the ledger, we post to the credit side. So we have insurance account. Insurance account. So I have January 4. Under what? Bank. Under bank 170. The next one is carriage. Carriage. So I have carriage. Debit, credit, carriage account. So carriage is on the debit side, like other roles for the payment side. So I have January 3rd. Under cash. That is 50 naira. So the next one is purchases. Like I did for sales, I'm going to use a ledger that is a bit big for purchases. So let me pin this last one, purchases. Purchases. So purchases is on the credit side in our cash flow. So we are going to post it on the debit side. January 15. January 15. Cash. Because it's under cash. 500 naira. The next one is fixture. Fixture. Fixture account. Fixture account. That's January 17. January 17. That's 105 on the bank. 105 on the bank. So the next one is January 25. Drawings. Drawings. Accounts. Debits. Credits. So I have January 25. Cash. 18 naira. So I have posted all the transactions we have on our cash book. We can move to the sales journal. So mind you, since we have an account for sales already that we have opened from the cash book, we don't need to open another account for sales. We maintain one singular account for all sales related transactions. So we are asked to transfer to the sales account all this. So we have Lasisi, we have Demola, and we are also going to prepare the two accounts of these people. So here, the rule of sales journal is to debit the individual account and credit the sales account. So that same rule is what we are going to apply here. So here, individual account, we have Lasisi. Lasisi. So we have to debit individual account. That's January 27. Sales. That is how much? 70. And there, I have an Demola account. That's said January 27. Sales 162. So we're going to also solve the question for purchase journal. We are posting this also to the ledger because we are asked to transfer to purchase account. So since we have a purchase account already, we are not going to prepare any other purchase account. What we just need to do is to maintain that same purchase account, and we prepare the two suppliers accounts, which is Ngoka and the Opulu. So here we have purchase account already. So for the rule of purchase journal, we are to debit purchase journal, and we are to debit purchase account and credit individual's account. So here we have purchases, which is January 7. January 7. This is Ngoka. Ngoka, that's 250. And I have the same January 7, Okulu. Okulu, 150. That's 150. Okulu's 150. So I'm going to open account for Ngoka. Ngoka account. And also I'm going to prepare account for Okulu. Okulu account. So by the rule I made mention of, I said by the rule of purchase journal is to debit purchase account and credit the individual account. So here I have January 7 purchases. That's 250. Sorry, this is for Goka. January 7 purchases 250, and for Okulu 150. So we had also transferred all these items or the transaction in the sales table and purchase table to their respective ledgers. So the only one we have left is our return outward journal. Return outward journal. So we have debit, credit, return outward accounts. The goods that we bought from Ngoka and Okolo, part of those goods were returned back to Ngoka and Okolo. And the rule is that we have to credit return outward account and debit Ngoka and Okolo's account, which is individual's account. So here, we are going to have Ngoka account debited. So January 30, we have return of it. I'll write it as R outward because of space. And write it as R outward, return outward because of space. So that's 15 naira. And therefore, Okunu, we have January 30, R outward, which is return outward, 15 naira. So for return outward account, we are going to credit the accounts with this total. So we have January 30, sundries, 65 naira. Sundries will cover the two accounts. So this brings us to the posting process. So we are done with the posting process. So the next thing and the final thing to do now is to prepare our trial balance. So when preparing the trial balance, we are going to need the figure from the cash book, that is the final balance on the bank and the cash account, and other figures from the other ledgers. But before we prepare our trial balance, we need to balance off our ledgers. So in balancing off our ledgers, this credit type only has a figure. So it is easier for us to close our account. So we have 5,000, 5,000. So we have balance carried down, 5,000, and we have balance brought down, 5,000. The same thing is applicable to Abiola. We have 1,050 naira, 1,050 naira. What we are doing is what we call balancing of account. So we have balance carried down, 1,050 naira, balance brought down, 1,050 naira. So we have the same on insurance. We have 170, 170, balance CD, 170, balance BD, 170. For the sales account, I have made some mistake because I only posted one part of it, which is Lasisi and Demola were not posted to the other double entry, and this will likely affect our trial balance because the trial balance will not balance if you have missed out on something. So immediately I saw it now, I have to bring back the double entry part of place. So for Lasisi is on the debit side, Daddy. So we're having January 27, Lasisi. That is 70 naira. And January 27, Demola, that is 162 naira. So we have completed this already now. So all we need to do now is to add up all what we have here and bring down our balances. So we have 3,017 and 162. This gives us 3,232. So we close the account with 3,232. 3,232. So we have balance CD 3,232. And then balance BD 3,232. So we move to the next ledger, which is carriage account. So we have a 15 naira, 15 naira. Balance carried down, 15 naira. Balance brought down, 15 naira. So the next one also, we close the account with 105, 105. Balance CD, 105. Balance BD, 105. So the next account is drawing, 80, 80. Balance CB, 80. Balance VD, 80. For Lasisi, he has 17 naira, 17 naira. Balance CD, 17 naira. Balance BD, 17 naira. For Demola has 162, 162. Balance CD, 162. Balance BD, 162. Now, for Ngoka has 250, which is greater than 50. So they are using the one that is greater, 250, to close the account. And for us to find our balance carried down, we take out the smaller figure from the higher one. So we have 200. So our balance BD is 200. For our purchases, we have 250, 150, give us 400 plus 500. That is 900. 900. So our balance CD is 900. Our balance BD is 900. And for Okulu has 150, 150. So our balance CD will be 150 minus 15 will give us 135. And our balance BD is also 135. So for return, we have 65, 65. Balance CD, 65. Balance BD, 65. So this brings us to the edge of the balancing of the ledger. So the final one now is to prepare our trial balance. So I'm preparing the trial balance on this end where I'll be drawing my table. So this is my trial balance. I have my debits and my credits, and I have my particulars. So I will have my Naira Serin and Naira Serin. Now, I'm going to now post everything I have here into my prayer balance. But before we start posting, one thing you need to know is it is where you have your balance brought down. If your balance brought down is on the debit side, you post it to the debit side in your trial balance. If your balance brought down is on the credit side, we post it to the credit side in the trial balance. So let's start with our cash and our bank balance. So we have bank, cash. Our cash and bank balance brought down is on the debit side. So we are going to post it from the debit side here. So I have 775 and I have 7370. So this is my bank balance and my cash balance. So having done that, I will move to the next one, which is capital. Capital. Capital has its balance brought down on the credit side. So I will post it on the credit side, 5,000. Abiola has its balance brought down on the credit side. That is 1,015 naira. Insurance, balance brought down on the debit side. Insurance, that's 170. Sales, balance brought down on the credit side, 3,232. We have carried, balance brought down on the debit side. Carried, 15 naira. I have fixture, balance brought down on the debit side, 105. I have drawings, balance brought down, 18 naira on the debit side. I have Lasisi, balance brought down, 17 naira on the debit side. I also have Demola, balance brought down on the debit side, 162. Ngoka, balance brought down on the credit side. This is 200. and I have purchases. Balance drop down on the debit side, 900. I also have Okulu. Balance drop down on the credit side, 135. And I have return out to, which is the last journal. And the balance brought down is on the credit side, 65 naira. Now, I haven't done this. All we need to do is to sum up and put our total in the answer. But one thing we need to understand is there are times when we prepare our trial balance, we need to classify some accounts. And in classifying those accounts, we will be able to know which one is debtor, which one is creditor. So if you look at individual things we have here, Adiola on the credit side, Okunu and Ngoka both on the credit side. We normally group them together and we refer them to creditors. We classify them as creditors. And if you look at those ones that are the individual or personal accounts that are on the debit side, like Asisi and Demola, when we group them together, we classify them as debtors. So we might not likely have all this name appearing. So we have them as debtor and put the sum together and put it there, representing debtor. Same thing with Ngoka, Okulu, and Aviola. We add all their values together and it will be represented by creditor. That is for instances if we are writing exams. So let's cast what we had here. On the debit side, we have 775 plus 7370 plus 170 plus 50 plus 105 plus 80 plus 70 plus 162 plus 900. This total gives us 9,682 on the debit side. So we need to confirm what we have on the credit side as well. So we have 5,000 plus 1,015 naira plus 3,232 plus 200 plus 135 plus 65. And this also gives us 9,682. So this shows us that the trial balance have tested the arithmetical accuracy of all what we posted in the ledger from the subsidiary books of cash book, the sales journal, the purchases journal, the return outward journal. Then after posting to the respective ledgers, the trial balance is showing us that what we have done here is complied with the double entry system. It has complied with the double entry system of posting. So this will bring us to the end of this class. And I believe you have learned so many from the first lecture and this present one. But one thing you need to understand is when we say practice makes perfection, it is only when you pick questions on your own and solve you can master and be a mastery of what we have here. See you in our next video. If we have any question, send message to us through our email or through our YouTube channel. Thank you for watching.